in essential commodities. After 2 weeks of decline, the Indian market kicks off the new week on a high note with both the Sensex and the Nifty making solid gains of over 0.5%. Sensex surging almost 600 points or 0.7% to settle marginally below 82,000, while the Nifty gains over 160 points or over 0.5% to end about the 25,100 mark. Market cap of all listed companies on BSE surges by 1.5 lakh crore rupees to over 460 lakh crore rupees. In the Sensex, Tech Mahindra, HDFC Bank, L&T, ITC, IndusInd Bank, Kotak Mahindra Bank and Infosys were the top gainers, rising by 1 to 3%. On the other hand, Maruti, Tata Steel, Bajaj Finance, Ultratech Cement and Nestle India closed lower. Indian rupee slips to an all-time low on Monday, weighed down by a fall in most Asian peers and strong dollar demand from foreign banks. The rupee, which weakened below the key support level of 84 for the first time on Friday, ended unchanged at 84 and 6 paise on Monday after dipping to a record low of 84 and 75 earlier in the session. The Maharashtra government has announced toll exemptions for light motor vehicles at 5 entry points in Mumbai. This decision was made during a cabinet meeting on the 14th of October and will take effect from midnight. As stated by Chief Minister Eknath Shinde, the toll booths affected are located at Vashi, Mulund's Lal Bahadur Shastri Road, Mulund Eastern Express Highway, Dahisar Western Express Highway and Airoli. The toll for light motor vehicles was previously 45 rupees. Reliance Industries is reportedly into advanced talks to acquire a stake in Bollywood powerhouse Dharma Productions, owned by renowned producer and director Karan Johar. This move could bolster Reliance's influence in India's booming content production industry. However, the exact size of the stake remains unclear. Dharma Productions is primarily owned by Karan Johar, who holds over 90%, while his mother Hiru Johar owns over 9%. The production house has a stellar track record of creating blockbuster Bollywood films. Talks about resuming direct passenger flights between India and China are picking up speed, with the Chinese government keen to get operations back on track. Media reports say on the 12th of September, a crucial meeting took place between India's Civil Aviation Minister K. Ram Mohan Naidu and Song Zhigyong, administrator of the Civil Administration of China. Discussions have since accelerated and there are positive indications that direct flights could be back in the air soon. You're watching In Your Interest, and the big question we're asking on this edition of In Your Interest is, are hospitals scamming you? Have you checked your hospital bills to understand what are the things that you're being charged for? Let's find out. The healthcare sector in India has been hit by what is being called as peak charges or surge pricing. This time around, it's not the cab that you booked where you paid surge prices or the delivery that you booked. It's for your hospital bills. From disinfection fees to peak charges for operation theatre time. These additional fees are making healthcare increasingly expensive. Insurance executives have sounded off the alarm bells, noting that insurers who once provided comprehensive packages with predictable costs are now grappling with an unbundling of services, which basically means if you book a hospital room, you will be charged for the room separately, the nursing separately, to your treatment separately, unbundling of services, taking out everything and charging them individually in your bills. This shift has come at a time when medical inflation has already soared to around 14%. That's right, 14% of medical inflation. And that is closely mirroring the rise in retail inflation as well. Now, despite the expansion of healthcare services, affordability remains a pressing issue for many Indian citizens. Medical procedures, surgeries, and even essential medicines now come with price tags in lakhs of rupees. For those without health insurance, the financial burden of medical bills can be devastating, to say the least. That's further complicating an already challenging healthcare sector in India. Costs are continuing to rise by the day. But the question remains, how will this trend impact access to essential healthcare services for the average Indian? Let's find out. We have a couple of very special guests joining us on the broadcast. We have Mr. Lokesh Dhamania, Chief Financial Officer of Clear Medi Healthcare. Thank you so much for being with us. And also, we have Dr. Ishwar Gilada with us on the broadcast. Thank you, Dr. Gilada, for taking time to be with us. Let me begin by asking Lokesh, talk to us. What is this unbundling of services, and aren't the charges and the costs already high?
Yeah, hi. Thank you, DV9, for giving me this opportunity to share my views. So in this, I must say we have to see three aspects to it. When we are saying it is increasing day by day, as you mentioned, also 14% surge in medical charges and healthcare services. So there are other costs also in the same field. If you see, one is if you see per capita income has also increased as compared to 4 years ago, and now it is 20%, which is currently. Another is medical technology. The major chunk goes into the medical technology to take into the hospitals, which is too high and which is mostly imported kind of machineries we are buying in the hospitals. So this is one part. So if we will see something which will be in India, if we will be able to manufacture that kind of radiology services, radiotherapy services, and these kind of high cost medical technology, if we can introduce in India, I can see that that will be, we can say that affordability will be there. Because as far as currently you can see, before that you have mentioned that we are at highest price of our dollar. Now everything hits to the medical technology directly, because every time whenever big hospitals are taking new machinery and everything, it comes with a cost, which is depending on dollar, definitely. As secondly, the import duty and the cost which spent on importing these kind of assets. And third major aspect is the technology. So when we are talking about AI technologies into the medical field, that is also play a very vital role these days to maintain the accuracy and the assignment things which can be minimized from the risk. So these are the three factors which is day by day growing, by which the overall cost for the treatment is increasing day by day. The remedy, what I feel, one is we have to set up good companies in India who can generate revenue through their internal patients, and the medical technology should be there in India, like manufacturing units we are having for like automobiles or other sectors,
Okay,
but we don't have that kind of facility in India for medical
Mr.
technology.
Lokesh Damani, you're essentially saying the costs of providing treatment have gone up because the equipment is expensive. Most of the equipment has been imported. Dr. Ishwar Gilada, has something changed drastically in the recent past? Because suddenly hospital bills seem to have shot up much faster than the price the rate at which prices of vegetables are shooting up.
See, basically, if you look at hospitals or nursing homes, they are not run by doctors, they are run by business people. And for business people, whether business is A, B, or C, it is a business. Number two, if we are now worried about surge in prices, we should have been worried about 30 years before when the commercialization in medical education started. And we vehemently oppose that in medical profession there should not be commercialization. Everybody should be admitted with merit only. But when the commercialization started, for example, currently the medical seats are sold at the cost of 1 lakh, 1 crore to 2 crore, and postgraduate seats are sold for 2 to 3 crore. So you can imagine if a postgraduate doctor is there who has spent 5 crore on education, that person will minimum recover 5 lakh per month, which is a 1% interest rate per month. Now, if 5 lakh is recovered, it is only bare minimum cost he is recovering on his investment. And that person has to earn at least 10 lakh to see that 5 lakh is paid back for the investment. So that is a simple economics. Now, if that 10 lakh has to be per month has to be recovered by just a fresher doctor who is a postgraduate qualified doctor in practice, how do that person earn? So they will have to do some kind of uh, commercialization in the private practice, and that by that way that person is going to recover. So number one, we should stop total commercialization in medical education if we want to have a good result in equitable practice in private practice. Number two, the hospitals which are run by business people. Everywhere there are charges like surcharges or those charges they try to recover. In some places there are something like ventilator on standby. So suppose you are admitted in a hospital, you are critical. They'll say, sir, tomorrow if you need ventilator, we don't have. If you want to reserve the ventilator, there will be ventilator on standby, and you need to pay standby charges. Number three, there are charges like registration charges. If a patient is admitted in a hospital, what is the registration charge? There will be registration charge. There will be all disposable thing will be charged like gloves, masks, syringes, needles. They're all when they're charged on per piece basis. Whereas the hospital is buying at almost 70-80% lower cost than that. So cost will be inflated. Secondly, the story is related to insurance companies. Insurance companies are also their motto is not to settle insurance. Their motto is how to deny insurance. So they will always try to see existing disease. For example,
Okay.
I'm a HIV and infection disease specialist. A patient is admitted for knee replacement. They will say, no, you cannot be given insurance because you are HIV positive. Now
Right.
you tell
But Dr.
me
Gilada,
how HIV positive is related to knee replacement. Knee
Dr. Gilada,
replacement is for growth.
and in fact, in this particular instance, it is the insurers who have raised the alarm bells. Lokesh Damania, it is the insurance industry and the insurers who have raised alarm bells about rising costs that they are not able to, foot, because at the end of the day, if you have medical insurance, they have to foot the bill. Despite all the categories in which they can deny the claim, there are some categories in which they have no other choice, and those bills have gone up so much.
Yeah, actually, if you see insurance companies also, they also done the capping on the basis of their sum insured. Okay, so if you buy a insurance of rupees 5 lakh rupees, you will get a different kind of services. And if you buy a insurance of 10 lakh rupees and more, so they will not deny. As you said, they cannot deny on those patients where they are generating money more, but where they have a limited kind of value of based sum insured, so they are putting most of the thing into non-medical kind of expenses. So now the insurance company and the patient. So what insurance companies are doing, they are negotiating with the patients, and many times we have seen patient has to pay a minimum amount of, if you consider 1 lakh rupees of bill, so approximately 10,000 rupees is the value which patient has to pay. Means approximately 10% is the value which they deny to the hospitals, stating that these are the expenses which is not covered into the policy. It is like that. So anyway, if I am buying insurance, after that, even I have to pay many things because hospital is charging differently. And one more thing, every patient has the right to review their bills and ask for each and every services from the hospital. As doctor has said, that is currently absolutely right, that many charges which is not at all should be there in the bill, which is not directly linked with the patient, but still they are charging. That they have 100%, they have to raise their concerns. If people will not raise their concerns, definitely hospital will charge many things in a different way. I agree with doctor's point also that number of seats is purely a commercialized these days. So everybody is like when they will enter into the industry, they start from day one that how they want to charge into the patients and what kind of services they want to give to the patients. So these
Right.
are the really kind of points which we as a patient we have to
Right.
see and we have to talk about on this.
We have to talk about it, and we have begun that conversation here, but I'm afraid we've completed a round of time with that. I'm going to thank Mr. Lokesh Damania, Chief Financial Officer, Clay Medi Healthcare, and Dr. Ishwar Gilada, Senior Medical Practitioner, for taking time out to be with us here on this edition of In Your Interest. With that, we're taking a very short breather here at the stage. We'll be back with lots more on the other side. Keep it with News 9 Live.
A warrior so brave he'll forever be hailed.
Maharashtra tourism.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Cooking is an act of love. The first act of love we receive from our mothers in the families.
Modern Indian food is all about contemporary and innovative approach to traditional Indian cooking.
Representation it's also important, no?
I want to wear this white coat every day and then be a chef.
There are stories. If we name a whiskey's ingredient, then there is a whole story behind that.
Cooking food is like a therapy, and eating one is like a pleasure I can give it to myself. With Lounge Nights, I'm on a journey to celebrate and recognize the best food and nightlife establishments in various cities across India.
Radical presents Lounge Nights every Saturday and Sunday only on News 9 Live.
News 9 Live, this is In Your Interest. I am Krishna Kumar. Now the big question is, what is happening in the Indian stock markets? Are foreign investors exiting the Indian market to go to China? Let's find out. Foreign portfolio investors, or FPIs, have been on a selling spree. They've been selling Indian stocks. How much? Worth a whopping $7 billion, or nearly 59,000 crore rupees. And that's just for the month of October so far. This mass exodus comes as tensions flare between Israel and Iran in West Asia. Consequently, crude oil prices surge, and the Chinese market shows some strong gains. Interestingly, this outflow from the Indian market follows a major inflow of over 57,700 crore rupees in the month of September, marking a sharp reversal in just a month. FPIs, or foreign portfolio investors who invest in Indian stock markets, have also sold Indian bonds, but net bond sales have been relatively modest at a little over 700 crore rupees, thanks to purchases of government bonds. Now, what's driving this trend? Well, it's part of a so-called rebalancing act. China announced a big economic stimulus package late in September, which caught the attention of global investors. Investment firms like CLSA have reacted by slashing India's overweight exposure from 20% to 10%. That's half. While Jefferies has trimmed its India weightage by 1% and bumped up China's by 2%. The shift is reflecting a growing preference for the Chinese market as it gets a boost from those stimulus measures, putting pressure on India stock market. Let's find out what's going to happen. Kranti Batini, Director of Equity Strategy at Wealthmill Securities, now joins us live on the broadcast. Kranti, thank you so much for taking time out to be with us. So simply talk to us. Are we going to expect more money to flow out of India and into China? And what does it mean for the ambitious targets for Sensex? One estimate is that it could touch 1 lakh by the end of this year. But looks like that's going to be a tough road ahead with now China coming back into the picture.
Yeah, Krishna, we can see some kind of hot money has been exiting in Indian markets. Of late, what we witnessed is past few quarters, a lot of ETF money and some hot money has entered into Indian markets. Right now, in terms of the relative valuations of Chinese markets, looks very attractive to them. Some kind of hot money, and also the recent stimulus measures what Chinese government has taken up. Okay, some kind of hot money has been exiting in India. But at this point of time, we don't see any kind of long only money which has come into Indian markets that's not exiting. But the hot money has been exiting Indian markets because of the relative valuations of Chinese markets for them, because for them looks attractive because as a foreign portfolio investors, the hot money do come into the market, but since they have an option of other value buy for them in a medium to short term perspective, I don't think so that's going to last for a long time. It is a short-term blip in the medium to short term. But on a longer term basis, relatively long only money has been waiting on sidelines to enter into Indian market. By and large, it's not a major concern. We have a strong foreign exchange reserves at this point of time. And this is a short-term blip at this point of time. And also, we have been facing the uncertainty around the escalating the global geopolitical issues, and also rising crude oil prices has been making the long-only investors to be on a wait-and-watch mode at this point of time. I don't think so. It's going to be a major concern in the longer term.
Not a major concern in the longer term, because the longer term India story is equally strong. But the problem here is what would you tell retail investors watching this broadcast, people out there watching this broadcast who have invested in mutual funds, we're looking to possibly exit mutual funds or enter mutual funds, or people who are invested in stocks who are looking to exit stocks or enter stocks and take positions. Tell us, from their perspective, how should they view the immediate near term?
Krishna, if you observe in the month of September, foreign portfolio investors have been the net buyers. In fact, they have bought for a tune of more than 55,000 crores. But whereas in the month of October, due to the rising global crisis, the geopolitical crisis in the Middle East, that prompted the investors to be on sidelines, and also the recent stimulus measures, as you mentioned rightly, in China, and also the valuations make this hot money to getting into Chinese markets. But whereas if you see the MSCI index allocation, the India's allocation portion has been gradually going up, and it is expected to rise further in the coming few quarters. So the MSCI allocation, which is the Morgan Stanley Asia Index, the India's allocation has been going up, whereas the China's allocation has been coming down, which is a very positive indication for the Indian markets on a longer term perspective. So the investors want to invest at this point of time, definitely any dip on Indian markets can be a very good opportunity. And right now, Krishna, if at all the same kind of selling, if we are just a decade back, if the same kind of selling is happening in the market, there used to be a carnage in the market. But Indian market has been resilient, and we reclaimed again the 25,000 levels. So the domestic liquidity is so strong. So the investors who want to invest in Indian market, any dip in Indian market, it's a warranted buy for them.
Okay, any dip is a warranted buy is the word coming from Kanti Patni. Kanti, thank you so much for taking time out to be with us. And with that, we're completely out of time here on this edition of In Your Interest. Thank you so much for watching. This is Krishna Kumar signing off.
Joe Biden is not going to be the Democratic presidential nominee.
I made my choice. Kamala Harris. She's experienced. She's tough. She's capable.
I took on perpetrators of all kinds. Predators. So hear me when I say, I know Donald Trump's type.
I am the one saving democracy.
He has tapped in to the fear and anxiety about demographic change in the US.
This polarization in the United States. Some people are even suggesting that there could be a civil war.
You are this unable to solve your own domestic problems. You have no right to claim to be anybody else in the world. And we're moving into a multipolar world where the United States will not lead.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Hey, why are so many lights on? Is it Navroz?
Settling accounts, uncle?
No, writing a love letter. Check your accounts every day and ensure there is no mismatch. Exchange sends trade-related messages daily. Do timely verification. And if there is a mismatch, inform the exchange immediately.
Soch kar, samajh kar, invest kar.